Standing tall and looking good. Standing tall and looking good. Ought to be in Hollywood. Ought to be in Hollywood. Standing tall and looking good. Standing tall and looking good. Ought to be in Hollywood. Ought to be in Hollywood. Whoa, whoa, whoa. Whoa, whoa, whoa. Wake up, we gotta go. Wake up, we gotta go. Whoa.
This is Mastering Real Estate with Master Sergeant Brian Wignall from the Wignall Group and the FC Tucker Company. On this show, we walk you through the process of home buying, maintenance, investing in real estate, and selling your home. Each week, we'll be joined by one of our platoon of local real estate experts to inform us about the various facets of the real estate industry.
I'll watch you with my back. Whoa, 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 whoa. Wake up, we gotta go. Wake up, we gotta go. Whoa, whoa,
Hello and welcome to Mastering Real Estate. This is your host, Master Sergeant Brian Wignall with the Wignall Group Real Estate and the FC Tucker Company. And I'm joined here today with my co-host, Matt Lawtis, the owner of Pillar to Post Home Inspections in Indianapolis.
Well, hey everybody, welcome to another show. I just got to tell you guys, it makes me smile every time I hear that intro. So I am going to ask Brian a completely unscripted question here because that actually is him doing that cadence. How long ago was that, and how long did you do that? Because you were actually a DI, a drill instructor, correct?
Correct, yeah. In the Army, it's called drill sergeant. I was a drill sergeant for 10 years, which normal rotation is 2. So they just couldn't get me out of that position. But that was recorded at a basic training graduation at Fort Leonard Wood about 7 years ago, 8 years ago. So it's been a little while.
And that's what, Missouri for Fort Leonard Wood?
Correct, yeah.
Okay.
Beautiful Waynesville, Missouri.
Yeah. So you really liked that job and you were really good at it. Well, today we are going to go through the process, kind of a recap of at least the initial stages of the home buying process. So we're going to talk about how to pick an agent, how to look at houses, how to talk to your lender, and we will actually have a guest on that starting in the second segment. So let's go ahead and start recapping that a little bit, Brian, with, I guess, how do we pick an agent? What do we look for in a good agent?
Well, I tell you what, first off, I'd like to read you guys a quote. I heard this at some training. My team and I were at a training event. We've been going every Monday. It's always important, no matter how successful you are as an agent, to keep your tools polished, because I want to make sure that myself and my team are very, very polished in both negotiation and marketing so we can do the best job we can for our clients. But I heard this quote, and I thought it was a phenomenal quote. Real estate cannot be lost or stolen, nor can it be carried away. Purchased with common sense, paid for in full, and managed with reasonable care, it's about the safest investment in the world. It's by Franklin Delano Roosevelt, U.S. President. And a couple stats that blew me away at this course we're going to. First of all, Dale Carnegie said years ago, 90% of millionaires either own or invest in real estate, which is pretty incredible. Now, of course, that nowadays would be billionaires. Millionaires, not what it used to be. And another thing that they talked about that I thought was pretty interesting. People actually said in polls they felt like buying a home is the most stressful event they've ever experienced. More stressful than planning a wedding or getting fired from a job. And we were just talking about realtors. One of the reasons why a realtor is important is because a good realtor is the key to making a transaction successful and less stressful. That's one of my jobs. Is I'm a counselor, I'm a mediator, I'm a defense attorney. I wear a lot of hats, as I know you do also as a home inspector. When I'm dealing with clients, I might have to deal with clients that are going through a divorce. I might be dealing with buyers that are afraid of making a mistake, and so part of my job is to kind of mitigate that stress.
Yeah, it's funny. We talk about home buying being such a stressful event for most people, right up there with death and things like that. And I guess maybe I've been in this business too long because it doesn't seem all that stressful to me until I stop and think about all the various steps people have to go through, from getting a pre-approval for a mortgage to trying to find just the right house to making that offer and wondering if you're going to get that bid. So when you stop and think about all the little steps along the way, there is a tremendous amount of stress there. And one of them we'll eventually have to do an entire show on this, obviously occurs at the inspection process, when people don't know what they're getting into, what might be wrong with that perfect home they finally found, or more recently, that home they finally got an accepted offer on. So we'll talk about stressors at inspections probably in a later show. But yeah, the process of purchasing, financing, closing on a home is very stressful for most people. And it's incumbent on, well, both Brian as a broker and me as an inspector to try and de-stress that process as much as possible. And I think the way we both probably choose to do it is through educating our clients about the process, talking to them about what's going to happen, and talking to them, at least as an inspector, about what we're likely to find with that house, basically how everything can be fixed in that house. It's just a matter of time and money, and talking to them candidly and realistically about that entire process. Sub-process for me for the inspection, more entire process from Brian's point of view.
Absolutely. Well, and that fear is kind of understandable because a house is generally the largest personal investment that somebody has. It's their largest investment. I remember the first time that I bought a car, that fear of, is there something wrong with this thing? And, am I going to have problems? Am I going to be able to afford to, replace the tires? And it's just ratcheting that up. It's a much larger investment. Other than getting married, it's the most expensive investment you'll have. Well, actually, getting married and getting divorced, that also can be a pretty expensive thing also.
I'm not quite sure what to make of marriage as expensive, but my wife would probably agree with you. The good news with buying a house is that real estate is one of those rare investments that almost never goes down very far, in terms of the money that you put into it. It almost always appreciates. It will pretty much always appreciate if you stay in that house long enough. We may be coming up on a period of a little bit of depreciation here because of the crazy overheated market we've had for the last 2 to 3 years. But even that little valley, I think, will go by pretty quickly. So the good news is that as stressful as it can be to buy that house, it is one of those few almost guaranteed investments out there. Assuming, of course, that is that you maintain it and you keep up with it and you do the fixes and stuff that you need to do on it. But again, we'll, I'm sure, talk about that in a later show out there.
Absolutely. Well, one thing we can kind of get into right now, and I hear this question a lot, is what are the steps to buying a house? And so we've been focusing the last couple shows on buyers. What are some things that will help buyers? And so steps to purchasing a property, as far as the way I explain it to clients, first step is find an agent. We talked previously, find somebody that's doing this full time, that's trustworthy, somebody that's successful, that's knowledgeable, that is available, critical one, somebody that answers your phone calls and that responds, that's responsive. Number 2 step, and I think it's just as important as that number 1, is find a lender and get a pre-approval. Now, when we come back from our break, we're going to be talking to a lender and find out about the approval process. So basically, find an agent, find a broker, get a pre-approval. Next step is start to look at houses. Real estate agents are not sending you listings from online, websites. Realtors that are licensed in Indianapolis have got access to the BLC, which is basically Indianapolis's version of the multiple listing service. The benefit of using the MLS, or the BLC as we refer to it, is you're able to look at properties much quicker. And in the market that we've had for the past couple years, when properties are selling within days, sometimes minutes of being listed, being able to see those listings 5 minutes after they're listed, as opposed to waiting a couple days for them to migrate to some external site, is important. So once you get those listings, you start looking at those with your agent, start scheduling showings.
I think I know the answer to this question already, but when we come back and we start talking to our mortgage broker guests, I'm going to guess that actually getting a pre-approval so you know what you can afford is going to be a critical, if not the critical, first step in this entire process. I'm kind of interested from a broker point of view. Would you recommend, once people know how much they can afford, that they go out, start looking at houses in neighborhoods, not going to open houses, anything like that, but getting a feel for where they might want to purchase a house if they don't already have a feel for that? Or would you suggest that that's something that might benefit from the counsel of a good broker?
Well, I think an agent's going to be able to help you, especially if you're new to the area. if you want to get information on, school systems in the area or what's close to the city life, if you don't have kids and you want to know where the nightlife is, I think agents that know the area are going to be pretty important as far as that's concerned.
Yeah, we talk to clients who, only looked in Broad Ripple because that's where they wanted to live, because they looked at that as kind of a hip and trendy area, or only looked in Little Flower for kind of the same reason. And I think you get kind of tunnel visioned when you do that, and you may not know necessarily what the options are out there for you. So getting somebody else's advice from kind of an outsider's point of view, I think would actually benefit a lot of people in that particular case.
Absolutely. And good agents are going to be able to get you that information. I've got a section on Notepad on my phone, which is absolutely stocked full of nothing but news articles on different areas in the state, where to relocate, what was the top small city in the United States last year, where are the best school systems in Indiana, all of that stuff. So good agents are going to have access to that information. They're going to be able to help you. So back to the steps in purchasing. Find an agent, find a broker, get pre-approved, start looking at houses.
So we've been talking about steps in the home buying process, and we really appreciate you guys listening to us this afternoon. When we come back from this break, we're going to be talking with Andrew Franklin about one of the most critical steps in that home buying process, which is actually the mortgage approval, funding, and how do we finance that house.
If you have any questions about real estate or anything regarding the real estate industry, please text them to 317-797-3580, and we'll feature those on a future show. You're listening to Mastering Real Estate with Master Sergeant Brian Wignall and Matt Lottis. And welcome back to Mastering Real Estate with your host, Master Sergeant Brian Wignall with the Wignall Group Real Estate and the FC Tucker Company, and my co-host, Matt Lottis, the owner of Pillar to Post Home Inspections in Indianapolis.
So, Brian, we have been talking about steps to purchasing a house, and the first two of those steps, probably in either order, are finding a good broker that you trust and starting to get pre-approval for funding that house. So what would be next in that process?
Well, the next step would be, once that agent has sent you lookups showing you what's available in the area, is schedule showings. So you'll be looking at houses with the agent that you're dealing with. That's why it's good to be working with an agent that you get along with and somebody that's responsive. You find your dream home just came on the market. You want somebody that's going to answer your phone call or at least text you back within 30 minutes to an hour to get something scheduled. Now, once you go to the house, you find a house that you're interested in. First thing that you would do would be to submit an offer, a purchase agreement. Now, when you submit that offer, the homeowner has got the ability to do one of three things. They can either accept the offer, they can counter. You put in a $200,000 offer on a house, and they can come back and say, no, we want $225,000. Or they can just not even respond. If it's a multiple offer transaction, I've experienced that, where they just don't even respond. So they've got the ability to accept, reject, or counter. Once you get into an agreement and they've accepted your purchase agreement, the next step would be to take earnest money and put earnest money down on the house. Now, earnest money traditionally in Indianapolis market is going to be 1% of the value of the property, no less than $1,000. And earnest money essentially is like a holding deposit. It's something saying we're serious about buying your house. Now, one thing I tell all buyers is when you turn that earnest money in, you always need to get a copy of that check or take a photo of that check and get that to your lender, because that shows your lender part of your investment. And we're going to talk about that a little bit later with a lender that's going to be on our show today. Once you get that done, the next step in the process would be to schedule an inspection.
Yeah, there's going to be a whole bunch of things that happen after you get that accepted offer, including obviously scheduling an inspection. And I would argue that you probably actually want to be looking for inspectors and determining availability before you probably, or as you're getting that accepted offer, because contingency periods on inspections right now are running about 7 days. So you usually have roughly a week to get that house inspected and looked at and figure out how you're going to respond to what you find during that inspection. So the sooner you do that, the quicker and faster everything is going to move. And then you're also going to have to deal with appraisers and other things going on that, again, we'll talk about later.
Absolutely.
After you get through that inspection, well, Brian, what happens after that?
Well, once you get through that inspection, based on what they find, you will do something called a buyer's inspection response. Now, what a buyer's inspection response looks like, say that we're looking at a house and the property inspector that I have out there, which will be somebody with pillar to post, will give us a report, and we find out that there is a couple missing shingles on the east side ridge of the roof line. There's a rocking toilet. It's not bolted down all the way, a couple bad thermal seals, and a linky P-trap in the sink. What we'll do is we'll do something called a buyer's inspection response. We'll fill out a response saying, Mr. Buyer, we're going to go ahead and buy that house from you for that $225,000 we agreed upon, provided that you replace those shingles, you fix that leaky sink, you replace those bad windows, and you fix the rocking toilet. Now, once we do that, that seller has the ability to do one of three things again. They can say yes, and you move on to the next phase. They can say nope, multiple offers, we're not going to do a single thing for you. Or they can counter, we'll go ahead and fix the roof, but we're not fixing the toilet, we're not fixing the leak. Once you get past through that and we come to a consensus, the next step is going to be getting an appraisal done. And that's going to be something that is done between the buyer and the lender. So you will have an appraisal done. When that appraisal comes back, if it comes back at less than what you're offering for that property, that's another negotiation. So once again, if it comes back less, it's going to be another situation where you go to the seller and say, will you sell it at the $200,000 that it appraised for? If they say, they can either say no, they can say yes, we'll go ahead and lower our price, or you might even meet in the middle. I'll go ahead and bring an extra $5,000 to the table if you'll lower the price of the property $5,000. From that point forward, almost everything that a buyer does is going to be with their lender. So that's why that's critical. So today, to talk about the lending process, we have a lender here with us. I use him quite a bit with my business. His name is Andrew Franklin with Langdon Mortgage. Hello, Andrew. Welcome to the show.
Well, thanks, Brian. Matt, great to be here with you.
Now, Andrew, I know you've got kind of a diverse background. We were just talking about that yesterday. Why don't you kind of tell us about your background in real estate and kind of how you became a mortgage lender?
Right. Well, I got out of college and I started immediately working in real estate as a builder rep, selling new homes out of the model home. So I actually spent the first 7 years of my career doing that. And I think that's one of the things that I kind of feel gives me good rapport with the realtors I work with. I know what it's like to be in their shoes and to be handling those transactions. So I always try to approach this not only to benefit the client, but the realtor referral partners I work with as well. So I did that for 7 years, and then I transitioned into the mortgage business. Right now I'm in my, it's been a while, 31st year of real estate and the mortgage business. Langdon Mortgage Company, where I work, was founded locally by Greg Langdon, and I worked for him for some time. In 2008, I left for a couple years, and then 10 years ago I came back and I bought half ownership of the company. So we're locally owned. We're at 96 Meridian in Indianapolis, and not a national company, but more locally focused.
Now, one of the things I really appreciate about Andrew and his company, if you remember the top thing I said, one of the top criteria on a good real estate agent is somebody that's responsive, and I really appreciate that with Andrew. He's another guy that's extremely responsive. He is one of the guys that I call up, leave a message for him. Hey, we need a pre-approval on a Saturday night, and this guy could be on his boat on the water, and I've got a pre-approval in 5 minutes. So really appreciate about that about you and your company.
I've got to interrupt. When have you left me a message? I answer the phone.
That's true. I think didn't you tell me once that your wife had made a comment to you that you and I talk more than you and her do at some point?
I'm going to take the fifth, but yeah, probably.
Yeah, that seems like such a little thing, but I have a very small list of people I recommend. We've really whittled it down over 17 years in this business, and everybody on that list, one of their key attributes is responsiveness. I know I'm going to get an answer shortly, even if they don't pick up the phone on the first ring.
Absolutely. Now, Andrew, first question for you. Aren't all lenders the same?
Well, that's an easy one. Pitch me a soft pitch there to start it off. No, not at all. there's a lot of different types of lenders. You've got your online lenders, you have your big banks, you have independent mortgage brokers. I know I've heard the term broker used here, and we do broker at Langdon Mortgage some, but we're also what's called a correspondent lender. Going back to when Greg started the company, back then you could get a tool that's not very available to people these days, and that's a multi-million-dollar line of credit. You can get it these days, but it's awfully expensive. But we've maintained a good track record and maintained that line of credit. So we actually, on conventional loans and VA loans and USDA, we can take the loan from start to finish. We don't broker it out. We actually fund the loan ourselves and sell the finished product. So it does two things for us. It gets us slightly better pricing and slightly lower rates, but also gives us more control over the process from start to finish.
Well, one other quick question for you before we go on to the second official question here. We were talking about the importance of buyers getting a pre-approval. A lot of times I hear two terms kind of used interchangeably, and they are quite different. What is the difference between a pre-qualification and a pre-approval?
Well, pre-qualification, I think, is more of a guess. I don't know that a pre-qualification is always backed up by income documents, tax returns if needed, things like that. A pre-approval, I think the standard for a pre-approval is the lender collecting income documentation, asset documentation, pulling credit, and running what's called automated underwriting. That gives us the official yes or no and tells us how much someone is approved to buy. I wouldn't put much credibility in someone's offer with a pre-qualification. I think the standard that you really want to see is a pre-approval. And the timing difference to get a pre-approval versus a pre-qualification is not much. So as you know, I typically turn around a pre-approval same day. So no reason not to do that.
Absolutely. And I can tell you as a listing agent, if I've got a couple very similar offers that come in on a property, and one is a pre-qualification and one's a pre-approval, I can tell you already which one that the buyers are probably going to, or pardon me, that the sellers are probably going to take in that situation.
Okay, so we've been talking about the steps to home buying, so let's talk about the financing step. So, Andrew, for somebody who's just getting started and wants to buy a house, what steps should they take with you?
Well, I mean, first step is to reach out and make contact with the lender. Pre-approval, the sooner you can do it, the better off you are. It'll also uncover if there's anything that needs to be done credit-wise and get those things taken care of. The lender will typically ask you to send in some information and make an online application, give permission for your credit to be pulled, and then they'll take it from there and run what I've referred to as automated underwriting, which gives the official approval. From that point, the lender is set up to issue a pre-approval letter to your realtor.
Awesome. Well, guys, thanks for spending your Saturday afternoon with us, and we will be right back.
If you have any questions about real estate or anything regarding the real estate industry, please text them to 317-797-3580, and we'll feature those on a future show. You're listening to Mastering Real Estate with Master Sergeant Brian Wignall and Matt Lottis. And welcome back to Mastering Real Estate with your host, Master Sergeant Brian Wignall with the Wignall Group Real Estate and FC Tucker Company, and my co-host, Matt Lottis, the owner of Pillar to Post Home Inspections in Indianapolis.
So we are here with Andrew Franklin, who is our mortgage and lending guru for the afternoon. So Andrew, for somebody who's thinking about buying their first house or selling their current home and buying a new one, what current loan programs are out there that they should consider?
Well, there's a number. Traditionally, conventional loans are kind of probably the majority of what we see. There's also FHA, there's USDA, there's VA. Typically, conventional loans are your straightforward meat and potatoes product that we see. Used to be associated with 20% down. However, they've made adjustments to the conventional loans that now you can do as little as 3% down, and even that can be a gift. FHA is a great option for a first-time buyer or someone whose credit score is a little more challenged. There's not as many adjustments for credit score with FHA, so that allows someone to get a favorable rate with maybe a sub 700 score. VA, as most people know, is for veterans, and that's a program that allows zero down. And then USDA, which I also mentioned, is a zero down program for rural or outlying areas. They're geographically restricted where you can get a USDA loan, and there's also an income restriction with that product as well. Those are the basics. I would say explain your situation to the lender and let them walk through it with you. They'll, if you know, like we offer all of those different programs, so we'll just gravitate based on the information that we get to the best program for the borrower.
Yeah, it's funny. I've seen USDA loans crop up in some of the most unexpected places because you think it should be a farm or a truly rural property, and they are not always in those locations. Let me ask you a real quick follow-up question. For some of those programs, there are certain additional services or things that have to be accomplished. Like on a VA loan, you used to have to get a termite inspection, and I think that's no longer the case. Can you real quick recap what some of those services might be specific to each of those products so people know what to inspect or what to expect?
Yeah, actually, there's not as many as there used to be. FHA and VA used to be notorious for when the appraisal was done, noting a number of things and having to have things corrected. I think that's one of the biggest disservices, by the way, to the veterans out there, is that a lot of listing agents still don't realize that the VA loan is one of the most successful and highest performing loan programs out there, and they think that it's going to be a problem, and it's not. VA actually does. We do get a termite certification on VA loans. That's really about it. There's if the house is on well or septic, we have to have a test done on that as well. But really, that's about all there is anymore. Everything is fairly standard across the different lending platforms.
Yeah, and that well and septic are actually specific tests that people have to ask for, but that is something we can absolutely accomplish when they get their inspection scheduled. And we will walk them through that if they tell us what kind of loan they're getting on that house.
Perfect. Hey, Andrew, I've got one for you here. Inflation and the Fed raising rates for the last few months have been in the news. I think they just did, a 0.75% increase, a week and a half ago? Yep. When the Fed hikes rates, do the mortgage rates go up by that amount? Is that something that is always linked up?
Good question. No. In fact, they're not necessarily related. The Fed's raising rates right now to fight inflation. Mortgage rates are really indicated by something that's called a mortgage-backed securities market, and that moves independently of what the Fed does with the prime lending rate. A lot of people think that mortgage rates are tied to the 10-year Treasury, which they follow more closely, but they don't always go lockstep with that either. It's its own market, okay. And it does not. In fact, we've had times where the Fed has raised rates and mortgage rates have gone down because of it, because they see it as fighting inflation. So very different. Mortgage rates actually, unfortunately, have gone up more than what the Fed has raised their rate. We've seen a great spike, and I don't think we'll see that settle until we see signs that inflation is winding down.
Now, on a kind of similar question here, what are the mortgage rates today? I know as of last week's show, we were seeing on a national level they were around, 7.675%. What are we looking at currently?
Well, that's one of the toughest questions to answer. There's so many variables. How much is someone putting down? How much are they borrowing? What's their credit score? What program are they going with? It's all over the board. People want to generalize it, though, and I would say around 7% today for someone with good credit and a decent down payment on a conventional loan program.
Okay.
Yeah, and historically speaking, 6 to 8% has not been at all unusual, and I've talked to quite a few mortgage folks that think that that is actually more the norm we should be at than the rates that we have been at recently. The stat that sticks in my mind, though, with today's market is that the monthly payment that would have bought you a $750,000 house this time last year buys you about a $400,000 house this year because of the increasing interest rates. So with rates so high compared to just a year ago, should people rethink buying a new home right now?
Well, it's a difficult question. If you're unable to afford a house that you're going to be comfortable living in, well, then maybe. But for the most part, no. If you can qualify for a house that will serve your needs and you can live comfortably in, you have to remember, even in soft markets in Indiana, generally houses are going to appreciate. And you want to get in on that investment and have your asset grow. a lot of talk has been made, maybe it's been overdone, about, marry the house. These days we're just dating the rate, and you'll break up with the rate down the road and refinance that house. So I wouldn't let the high rates stand in the way of buying a house and getting started on that journey. I do think the consensus is we will see at some point rates come back down some, and hopefully we'll have an opportunity to refinance it and lower the payment then.
Now, I will say from an agent standpoint, one of the big benefits in buying right now, because I've had people ask me, should I buy now or just wait? One of the things that I think is a great reason to buy, why it's a great time to buy a house. Even 4 or 5 months ago, I would have first-time home buyers. I would be showing them properties that they would like, especially at that $350,000 and below price point. And we would put offers in, and we would be competing against 12, 13, 14 other offers. And it was just hard to get anything. We're in a market now where the market's just slightly starting to cool. Prices aren't going down, but the market is cooling. And so rather than competing against, 15 other buyers, we might be competing against 2 or 3. So it's definitely a great opportunity for first-time home buyers or people buying properties that are more reasonably priced to be able to go in and get the house right now. And like you just said, Andrew, marry the house, date the rate. When the rates drop again, you've got that house, and then go ahead and refinance.
Yeah, we are not at a point where I think people should consider not buying houses because of the interest rate. Because again, historically, rates right now are actually not that out of control. It's just that we have gotten so used to cheap money for the last few years that, well, it seems kind of higher than it should be right now. It's really not. And like Brian just said, even at 7% today, buy the house, and if rates go up, you've already locked in that house at a lower rate. If rates go down, refinance the house. So yeah, I do not see a huge downside even with rates where they are today with buying.
Now, Andrew, this is a question kind of near and dear to my heart because I experience this quite a bit. I see a lot of online lenders advertising rates under 5%. Now I know, being that I'm looking at rates not as often as you are, but pretty regularly, that there are certain things you would have to do to try to get a 5% rate. So with people advertising those rates, could you talk to me about how they can advertise that? And should somebody go with an online lender? And if so, why or why not? Well,
an online lender, the only way that they get business is to get you to call or click. So they have to put something out there that grabs your attention. Those rates, I call them unicorns. It's great in theory, but I sure haven't come across one. Or when I do, I'll find it's 5% rate, but it's 6 points to buy it down, and it costs $25,000 extra for closing costs. It's really just a way to get your attention and get you to call. It seldom works out to be that way. We don't do that. When people call, we advertise realistic rates without points. If someone wants to buy it down, we can talk about that, but that's maybe a different topic or for a different question. But no, the online lenders, we just do business a different way. We don't throw out a carrot to get you to call. I find that it's a little disingenuous, personally.
Well, guys, it'll be worth your while to stay with us through this next break because we're going to continue to interrogate Andrew about the ins and outs of the mortgage business. So we'll see you on the other side of the break.
If you have any questions about real estate or anything regarding the real estate industry, please text them to 317-797-3580, and we'll feature those on a future show. You're listening to Mastering Real Estate with Master Sergeant Brian Wignall and Matt Lottis. Hello and welcome back to Mastering Real Estate with your host, Master Sergeant Brian Wignall with the Wignall Group Real Estate and the FC Tucker Company, and my co-host, Matt Lottis, the owner of Pillar to Post Home Inspection. Now, currently with us right now, we've got Andrew Franklin with Langdon Mortgage. Now, Andrew, when we just went to the last break, we were talking about kind of some of the differences between going with an online banker compared to a local lender. So what are some of the differences between, say, a big bank and a local lender?
Oh, good question. I think the differences have been highlighted a little bit more in the recent market. With a big bank, you don't necessarily know who you're going to get. They have some great people that work at them, and they also have some that don't. And some of the bigger banks have gotten a reputation of not closing on time, the process not going smoothly. So some realtors have stayed away from them. It's been interesting. I've gotten more calls in the last 2 years from listing agents saying, well, we just wanted to let you know that your client's offer came in $5,000 lower than our highest offer. However, we're going to take it because we know Langdon Mortgage Company. We've closed loans with you before. Your reputation is that you get things done smoothly and on time. And that's really made a difference because people want to make sure that the transaction's going to happen and not have to put the house back on the market.
Well, as an agent, one of the things I appreciate too, we were talking about this before the last break, is responsiveness. You know, it's amazing. I try to call my local bank a lot of times, you know, Friday at 9:30 or Saturday at 8:30. They do not answer the phone for me. I don't know what's up with that. So I do appreciate that responsiveness too that we get, you know, dealing with you and your company.
Yeah, and I can say that from an inspection point of view, we do see problems having people getting those big bank loans through underwriting. They always seem to be a little bit behind the eight ball. They're calling us last minute for paperwork or for, you know, receipts for that termite inspection we had to do for a USDA loan. And with local guys, with somebody running point, it just seems to move so much smoother, and we don't have those last minute hiccups that we do with the bigger, more impersonal organizations.
Good way to put it.
Now, Andrew, going along with our discussion on like internet banking, one of the questions that I had for you that I had written down here, I had personally experienced a situation with one of my clients that had gone through an online banker, and it was for a house that was in the Carmel area. And when they had the appraisal done, the person that was in the appraisal pool for that online banker was actually a gentleman that lived out of a small town in Indiana. So was very, very unfamiliar with the Carmel area. And in my conversation with the appraiser, prior to him coming up with the appraisal, he talked to me about how he felt like it was a bubble and stuff in this area was overpriced. And needless to say, the appraisal came in very low, which made more work on my end. Does going with a local lender, is that helpful in the appraisal process?
Well, it can be. Not all of the local lenders have this ability. However, fortunately for me, Langdon Mortgage Company does. With our extensive history in Indianapolis and doing loans and a good track record, we have been approved to have our own appraisal management company in-house. So one of the fallouts from '08 was there was collusion between the shady people and the appraisers and inflating values and things like that. So a law was passed that appraisals have to be randomly assigned, typically through an appraisal management company. And most of these big banks and online lenders will just use a random appraisal management company who selects an appraiser, like they did in your case, from somewhere else. I have in-house hand-selected our appraiser pool. So I know that, first of all, they're good. You know, they've got extensive history. I think of the 5 in our pool, they have 28 years average experience. So they know the area. And we know that when we order an appraisal, now it's randomly assigned within that pool. I don't control who gets any particular order or have any involvement in it. So there's still the disconnect between the loan originator and the appraiser. But we know that it's going to go to someone good. We know that they know the area. You know, that's where they work. And we know that, you know, they'll do their best to find value if it's there, but we also want them to tell us if we don't want our clients to overpay. So I know when appraisal comes in, it's justified. And I can go to my clients and say, hey, we don't want you to overpay for this house. And this is a solid appraisal. Here's the comps, and go through it with them and show why the price needs to be negotiated.
Absolutely, because there's definitely a big difference in the market between Kokomo or Martinsville or Anderson, Indiana, and Carmel or Westfield or Zionsville. So it's good for that appraiser to be able to do their job properly, to be familiar with the area that they're doing the appraisal in.
For sure.
Yeah, there was a time when we would cross paths with appraisers who were coming from literally way out in the country, being asked to appraise a condo downtown. And it's just not their area of expertise. And what you'll find in the real estate world is, well, everybody kind of develops their own area of expertise, which again is a topic for another show, and how do you pick the right person for you? But that absolutely applies to appraisers as well. So one of the more common questions we get, if somebody's had a credit score that's taken some hits, should they wait to call a lender? Should they contact a lender right up front? What are some of the questions they should ask? What are some of the things they should do to kind of help repair that credit and get the best rate possible?
Good question. I find that things like that don't tend to get better by ignoring them. And that's what people, I think, just like to do, is avoid things that are uncomfortable or they're not proud of. And so really the first step needs to be call a lender, have them pull your credit, and we can put together, I have a software program that will help tell you the most effective and fastest way to increase your score. So, and it's not always what you would think. Sometimes it's just paying down a credit card to a certain level, and it doesn't take much money. It's interesting to see the results we get back from this. But no, don't take off the Band-Aid and get started on the process, because I think not only do you need to know the most effective way to do it and the fastest way to do it, but when you make that step and reach out to a lender, then there's a little bit of accountability that's shared. And the lender's going to check back up on you in a month and see how things are going, and have you monitor your score and get you on a path. You need a path with a time frame in mind to get you to the point where you're ready to buy. So definitely call the lender. That's a case where, not to change Brian's rules of steps to take, but that's one where probably call the lender before you call the realtor would apply.
So I have an inspector lender question for you, and it's obviously going to be kind of a loaded question, but when should a buyer give their inspection report to their lender?
Never. We don't want to see it. It's interesting. If you look at the way that the contract, Indiana uses a standardized form, or at least the Indianapolis metropolitan area, it is engineered to separate parts of this transaction. And the appraisal part is not something that is given to the lender. All it can do is, if an underwriter sees something, they're going to act on it and ask for it to be corrected or addressed. It is not required within the contract for the inspection to be included, so don't do that. The contract is set up so that the agents can do an inspection response that is separate from the contract that the lender does not see. So really, the borrowers typically don't send the report. Occasionally they'll ask if I want it, and of course I just say no, I don't need it. We do see occasionally new agents or uninformed agents forward it on, which goes back to the whole rule of, when selecting a realtor, find someone that's full-time, knows what they're doing, and they'll know better than to do that. Or the bigger one we see is then, in lieu of curing black mold, seller to discount the price $3,000. You just can't put things like that in a contract or an amendment to a contract.
Yeah, it almost never ends well once the underwriter gets a hold of that inspection report, because they always want definitive proof that the things they're alarmed about, which almost never seem to actually be the most significant problems, are definitively fixed. And in this industry, it's very hard to prove that something is actually definitively fixed. So don't ever give your inspection report to your lender.
Now, I've got a question for you here, Andrew. Where do you see rates going from here? I know that the averages in 1981, we were talking about this last week's show, was 16.63%, with a similarly hobbled economy. Where do you see them going at this point?
Well, to back up even not before I answer that question, truthfully, I didn't see rates going to this level, and I think a lot of people were surprised by that. My hope is not a lot higher. I think that it will be interesting to see what the Fed does. There was a lot of articles that came back last night saying that the Fed is going to choke off the economy with the rate hikes, and we're going to see us fall into a recessionary environment. And recessions typically bring rates down. So it would be nice to see rates come down, but I don't think anybody wants to see us fall into a recession. I just don't think the odds of the Fed achieving what they call a soft landing at this point are very, very good. So I think volatility will be the name of the game here for the short term. That's another reason I think when you pick a lender that's local, that you're dealing with the same person every time, you have the benefit of, for example, I watch rates every day. And most lenders will just lock in your rate the day you make application, because they just get it done with and move along. I watch rates, and we try to time the market and take advantage of a dip. In volatile times, we have wide swings, and we can, if you're watching it carefully, catch it on a decent day and maybe lock it in a little bit lower than if you just locked it in the day you made application. So another benefit of working with somebody that, is local and in touch and accessible.
Well, I will tell you, it's been a roller coaster ride with real estate the past couple of years. We were talking last week about how the lowest rates in recorded history were in January 2020, 2.5% fixed rate on average, and the highest rates we've seen in the last 15 years were last week at 7.675%. Now, I was kind of thinking about it. I wonder what went on between January 2020 and September 2022 to impact that. Actually, maybe we shouldn't talk about that right now, but I'm sure on Freedom Radio, people have kind of a vague idea of some things that might have changed that might be contributing to that problem here.
Well, guys, thanks for spending Saturday afternoon with us. Next week, I think we actually get to talk about inspections, my area of expertise, so I'm sure Brian is going to pepper me with questions on that one, and I'm kind of looking forward to it. So have a great week.
Thanks for joining us today, and if you have any questions dealing with lending, or if Andrew didn't answer any questions that you have regarding the lending process, feel free to get a hold of him at andrew@langdonmortgage.com.
Wake up, we gotta go. Wake up, we gotta go. Oh, 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 oh.